Hey guys, what's going on? Todd here. This is going to be your video update for Tuesday, November 24th. And let's see. Pardon me, I'm a little under the weather. It's a fun time here in the Northeast. Both my boys, Jake and Brody, they're sick. They have ahead of Thanksgiving. They have all-in-one earaches. They have congestion, and they both have pink eye in both eyes. So like, I am so contagious. Like, don't touch your computer screen. Like, don't even touch his video. Oh my God, this is so fun being a parent. Anyways, all right, let's dive in. So I was doing some scanning in the on MotiveWave software here, and a couple good setups came to my attention. So the home improvement sector industry group, I should say, Lowe's and Home Depot acting well. Lowe's looks like we have Wave 3 rally in progress. It should get up to the 1.618 relationship, which is common in the third wave at 79.08. The other one that looked good was Home Depot. They came up on the scanner here. So this one is also in a third wave, okay? And I kind of want to spend just a second here pulling this wave count apart, all right? So this is Home Depot on the 60-minute chart. Okay, so let me draw out first. Let me just kind of explain what's going on here. Let me show you the model, okay? In a good third wave, here's what we're looking for, okay? So you're going to go up in 1, down in 2, up in 3, down in 4, and then up in 5, okay? So that's the model. All right, let me just do this, preferences, show lines, okay. Now, how do you figure out how far a wave 3 should last? Typically what's gonna happen is the distance traveled in wave 1, okay, will be multiplied by 100%, 127%, 161%, and 200%, which are your Fibonacci multiples, okay? Typically your third wave would go to a 161% multiple of wave 1, all right? So the way you're gonna do that, and again, we're gonna take this distance traveled in wave 1, and then project that distance multiplied by your fib up from wave 2, like this. Okay, so MotiveWave has it built in pretty well for us here, so we can just click down, ratio analysis. I want to look at the typical measurements between 3 and 1. Okay, so let me show the prices here. Let me get rid of that one. Okay, so what we're looking at here is if you were to take the distance traveled in blue 1, project it up, 100% would be right at the blue level, which is your minimum, at $140.34. If it were to go up to the ideal 161%, that would be 144. So I'm going to drop wave 4 or wave 3 right down there at the ideal 161% projection. Okay, now we're not done with this study. After wave 3 tops out into that 161, sometimes you get up to 200%, you're then going to pull back in 4, okay? Wave 4 needs to stay out of the territory of wave 2, or else MotiveWave is going to give us a warning sign here, okay? Fine. Then what's going to happen is you're going to expect new highs to be made. Now we're going to get up into the zone of 200% to 261% in this zone right up here. Okay, so you can just go ahead and leave this study right on. So 161% your wave 3 top, 200 to 261% is your wave 5 top. Okay, so down to MotiveWave, down to the count in Home Depot, let's just apply what we've just learned. Okay, so wave 3, remember what I said, is 161%. We're expected to do 161% of wave 1. So let's just do the same thing, ratio analysis, 3v1. Okay, so we have, let me pull the 1272 in. Okay, price. So your minimum is 100% at $132. Your middle target's 135, and then the ideal 161% for wave 3 is up at 137.80, all right? And then what's going to happen is once we get the wave 3 top, wherever it's going to be in here, you'll then get a wave 4 pullback. It needs to stay out of the territory of wave 2, or else you get a warning sign. MotiveWave will yell at you. Okay, then wave 5 should unfold, and we should get up to the 261%, all the way up at over $140. Okay, so what I think we should do is just play for the ideal wave 3 target. Okay, now, something I didn't talk about yet, but there's 5 good waves in a good Elliott trend. 3 of them are trend waves. 1 right here, 3, and then wave 5, which has yet to unfold. All of those should break down into 5 smaller waves, okay? So we're on a 1-hour chart here. You could pull these bars apart or go down to something smaller like a 30-minute, okay? So let me just pull this apart. So we need 5 smaller waves, okay? The quickest way to do this is just to look for the 2 biggest corrections. Okay, so far I see a sideways correction right about here, and I see another sideways correction right about here. Okay, so that means we have 2 corrective waves. Looks like we have 1 trend wave, another trend wave, so we just need 1 more trend wave to complete the whole series. So what that's going to look like, and let me let Motive Wave do it for us, decompose as an impulse. Yes. Okay, so I just did the automated labeling here on Motive Wave, so there we go. So there's 1, 2, 3, 4. All together, guys, we have 1 more little wave 5 move up to complete the 5 wave sequence within blue 3. Blue 3 should terminate up around the 161% of blue 1 compared to blue 3, which is up around $137. So all together, guys, we have a little trade here. Anything below, and I'm not going to go into the logic of this. We'll save this for another video. I'm going to do 4v2. Okay. Anything below $130 in the expected range of this 4th wave is way out of proportion, probably wrong in the count. You want to stop yourself out. So anything below 130, I want out. Entry right around 132.50. And we're looking for a wave 5 move that should take us up towards $138. So basically, guys, you're risking about $2.50 to look to make about 5 in the upside. Okay, so let's just take a look at the options market here. Let's go and trade HD. Let me just see the time elapsed of this trade. Let me just do some quick time analysis. 5 versus 3. Pin it. I'll shift 5. Another. I'm just looking at ideal timing. Again, I'll explain this in another video. Where's my crosshairs? We should. I mean, this trade should really be over by the time December rolls around. So we don't need to go out that far. We can even go out to the December weeklies. Where's implied volatility in HD? .9%. It's about as cheap as you can get. So, you know, you could go ahead and do like a 132. I mean, you could even do a 132, 137 call spread. It's not going to be that expensive. I'm a little nervous to go out 11 days. Let's go ahead and do the Dees monthlies. They're about a little bit more time than we need, but with such cheap options, it probably won't matter. Buy, let's go 132, 137s. It's going to cost $1.81 for a $5 spread, and that 132 is 50 cents in the money. So you're looking to buy 132s. Your final wave 3 target is 137.80. We'll just go 137. We don't need to be a pig here. So 132, 137, call it a spread. Home Depot. We just did a lot of Elliott Wave. We did a lot of Fibonacci, a lot of work, well-researched plan. We have a stop. Anything below 130, I want to get out. Okay, see if we can save some of that premium we laid out. All right, guys, that's the trade. Home Depot has been a very strong stock and an otherwise strong uptrending market that, as you guys know, I've been watching these markets very closely. The indexes, it's kind of goofy in here, man. They could go either way with these stock indexes, but they're still strong stocks like Home Depot pumping to the upside. So that looks to be a pretty good trade on the upside. All right, guys, go ahead and hit the like button that I'm showing you here. Huge help. You guys have been liking the heck out of these videos, so I really appreciate it. Helps us rise up. That's Google SEO candy, holiday candy. So thanks for that. And if you want to subscribe to these videos in real time, go ahead and hit that orange button. And I'll see you in the next video update, guys. Take care.